think that other than that, we had a couple more articles to go over, but nothing too crazy. I did browse, Cointelegraph, etc. I mean, at this point, like obviously clickbait on the title, but I will say, Bitcoin's at 109,754. Okay. It's down over the past 24 hours, 0.34%. So I called it. It was the top. Game over, boys. Pack it up, sell it all, get out. Look at that. Look at that. Look at that. Would you look at that? I don't really actually know anything. I do know from a timeline perspective in the traditional halving cycle, we just have a few more months before October where we see like, we're running out of steam from the traditional halving cycle perspective, but Bitcoin has also become less volatile than it ever has been, but it is also being used less than it ever has been. Now, some people argue that it's being utilized less because of the interoperability between chains and wrapped Bitcoin, etc. I don't really see that being true because the rest of the chains are pretty empty as far as blocks go too, outside of Solana, right? Now, there are predictions all over the place from 120K to 230K. The best case scenario here is Bitcoin's fair value could be as high as $230,000, and that's coming from Bitwise analysts. And it does say that could be thanks to Trump's tax cuts. Now, markets do go up when there is more money in the pockets of the people. And I've talked about this before, the best thing Trump could do is lower energy costs and cut taxes. Now, there was promise of both of those things happening. We've yet to see that come into fruition. Of course, it's only been 6 months, so there's still a lot of hope there. But there's a lot of argument surrounding the Big Beautiful Bill Act, which we covered in the Elon Musk versus Trump episode a couple days ago. But in their weekly crypto outlook, Drago SCH and Tripathi cite the U.S.'s soaring federal debt and mandatory spending exceeding revenues, exacerbated by Trump's proposed One Big Beautiful Bill Act tax cuts as key drivers of their bullish Bitcoin prediction. The Congressional Budget Office forecasts net interest payments tripling to $3 trillion by 2030, raising default fears. There we go. Quote, Bitcoin's scarcity and resilience position is uniquely to benefit from both fiscal instability and improving market sentiment, Bitwise analysts said. If these trends hold, the top crypto could shatter price expectations by the end of the year. Now, remember, most of this halving cycle's predictions were over that $200,000 mark. So that is really what people are still pushing for. An example of such sovereign stress is Bitcoin's performance in the wake of Donald Trump-Elon Musk feud last week, driven by latter's criticism of the One Big Beautiful Bill. From this, they say it caused Bitcoin's decline to almost $100,000 or dropping below that. Now, I talked about this as well. It was interesting that we saw that dip, and then we saw the announcement from Trump's World Liberty Fund of its purchasing, and then directly after they announce and they make purchases for the World Liberty Fund, well, guess what happens next? The SEC comes out and says, proof of stake, none of these crypto practices are going to be considered secure under securities law. So to me, like, all of this screams manipulation, price manipulation. I still think to a certain extent that was at least a secondary incentive for the Trump-Elon Musk feud. And I got to stand by that. You can say, well, it's just a coincidence, but once you have a certain amount of coincidences on a graph, that just creates more points on a graph, and it all points to the same reality of the situation, which is like, okay, so you're going to tell me they have this argument, Bitcoin dips, World Liberty Fund purchases, U.S. Security Exchange Commissions announce a ruling, and then the price goes up, and we hit near new all-time highs on Bitcoin. That's just a coincidence? Sure, buddy. Okay, fine. Just a coincidence. I'm just saying it's a pretty strong coincidence, right? Adding to Bitwise's outlook, a May 28 analysis, there we go, by Stock Money Lizards highlights a bullish Bitcoin breakout indicator. The signal comes from the optimized trend tracker, OTT, which triggered for the first time since mid-2024, suggesting Bitcoin will potentially reach $200,000 in 2025 with a possible extension to $250,000. Last month, Bitwise CIO Matt Hugin told Cointelegraph that the Bitcoin price will hit $200,000 by the end of 2025, driven by a supply shock from surging institutional demand. A power law model that is accurately called Bitcoin tops and bottoms in the past cycles further hints at Bitcoin price hitting $200,000 by year's end. The big difference here, obviously, that I keep pointing out is that we are over that 90% mined mark for Bitcoin. The power law is affected by the halving cycle. It does do a lot of assumption, both from the perspective of supply shock, but also from the perspective of just the mining price and halving cycle. And I still debate, how realistic that is, depending on, how rich is it going to make everybody that's currently holding Bitcoin, and when are they going to want to drop out and make that money? It just depends, right? The other thing about the institutional buying that's been going on is a lot of that is paper trading. So just to give you an idea of what I mean by that is that if you have a 401k, for example, which is mostly where the funds are going to come from for ETFs for Bitcoin, is that when people are trading within those funds, it's just staying within those funds, right? You might have one person that has an ETF, Bitcoin, and then they swap their 401k to the top 3 S&P 500s, and then somebody else picks up the Bitcoin ETF in that particular situation, right? Nothing happens on chain for Bitcoin. That money stays with, or that Bitcoin stays within custody of the ETF holder. So what has to happen, obviously, is that there has to be a demand that pushes outside of the holdings that are currently available within A, B, or C ETF to where they have to go to the chain and purchase. But the downside to that, especially from a mining perspective, and from an intrinsic value perspective. So intrinsic value of Bitcoin comes from the energy cost to mint the Bitcoin and process the transactions. So in the case where we get to fees becoming more relevant as the block reward is reduced, it means that we need more transactions happening on the network to generate that value. And if those transactions aren't happening as frequently, then the value therefore obviously would go down. So that's the argument against this, right? Is like we've hit this position where institutional demand doesn't drive activity on the network, and without activity on the network, you don't generate value from the mining process, and it impacts the power law negatively. But it still does, at the end of the day, come down to supply and demand. So if the demand is high enough, even just on the institutional side in the form of ETFs, then it could drive external buying. We'll just have to sit back and wait. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.